Hello, folks. Welcome to State of the Market. I am David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. I might be having some sound issues. I think the wrong microphone is working for me. I was trying to fix that. I'm not sure why my computer doesn't want to pick up the correct microphone, but I do think I have sound, so I'm going to just go ahead and continue. I'm just showing you some disclosures. I'm going to also provide in the chat some more disclosures and information. Great to be with everyone. Thank you for joining me today on this Monday. Very interesting. If you look back a week ago, we were talking about some levels on the S&P that more or less played out. So a pretty crazy week. We had on, I think it was September 11th, we had the biggest move for a positive, the biggest swing overall for a positive week since the bull market started in October of 2022. When I say bull market, I mean the kind of run that we've had now that really started with a bullish outside day in October of 2022, 23 months ago. And that was a big bullish outside reversal. And we had one again last week. Okay, so I'm going to also show you here some standardized returns. We are talking about ETFs here. I want to show you the standardized returns. We are also providing the link to tradestation.com/insight/ETF-disclosures if you want to see the disclosures on those. And we talk about here mostly weekly sort of levels and charting on some of these big ETFs. We're trying to identify sector strength, looking at things at the index level. We're mostly using TradingView for this because TradingView has charts I can easily jump around and show you. I'm also going to very quickly show you one or two of the things I thought were kind of interesting here. You might want to go to TradeStation.com. I'll just show you right now. If you go to TradeStation.com and you go to Insights, we did this article today, and some of the points we're looking at on the S&P 500 are included in this article. Chips lead a violent comeback as sellers vanish before the Fed. Go down to charting the market, and you can see where some of these points that we're looking at here. It's kind of interesting to see. This is a daily chart. We're going to mostly look at weeklies today, but if you look at this, the pullback, we held a 50% retracement. Last week, we were talking about 5,400. We said it was an interesting level that went back to this point in June, shortly after the market gapped higher on a soft CPI report. We held that level on multiple occasions. It was that bearish outside day back here on August 1st. We tested it a second week with this big, huge bullish outside candle and held that level. So a lot of interesting things kind of happening here in terms of the charts. Technically, if you want to look at this article, some of these points are covered. All right, now I want to just mention, previously, we had actually talked about back when the market was crashing on August 1st, we had talked about how this was oversold. Now, this is basically a measure of how far the index was from its moving average. In this case, it was a complicated moving average. It was a 50-period moving average on a 4-hour chart. But essentially, the key point is that at this point back here on August 1st, as we were crashing and we were talking about at the time that it was a very oversold level, I want to just point that out. Now we're at a spot where you can see the rebound we had was pretty overbought based on history. And now we're back at a spot where we're back where we were, but we're not as much overbought now, which is kind of saying something, which is potentially kind of, not a bearish thing. When we were up here at this overbought level, it was a spot where people could say tactically short term, do I want to push it? And this point, though, is not as much the case. So it's interesting to look at this as in terms of the distance from this red line, which is the 50-period moving average on a 4-hour chart. So you can draw these things different ways. I wanted to emphasize that. Also, this is the hourly chart with RSI. It's interesting to look at this pullback we had last week, how we went back down to an oversold condition. And then basically you can see that we were overbought. Also, it showed the overbought condition. We barely went to overbought, but we're just kind of hanging in there. So the key point here is that the overbought condition that we saw, in late August, and even, to a certain extent, most of the overbought condition we saw in late August is now kind of fading. Now, that's very short intraday stuff, which we mostly don't do today, but I wanted to mention it because it popped up. I also want to point out that we have this interesting indicator here. This is basically looking at monthly returns. So this is showing the first half of the year versus the second half of the year. In the first half of the year, real estate investment trusts were the worst performers. In the second half of the year, they're the best performers. In the first half of the year, communications were best, and they're lagging in the second half. They're not doing as badly. But here in the second half, aside from the weakness in energy, technology is lagging. So this rotation narrative is kind of demonstrated by these points I wanted to show you. First half versus second half. We're using a special thing here. These are some of the custom indicators we give you guys in market trends on Thursdays. Thursday, 2 p.m. Come back. We'll do market trends. We'll give you the zip file so you can make it work with your TradeStation platform. All right, that's the main thing I wanted to show you today. I'll also just quickly mention that I am going to be in Miami the week before Thanksgiving at the Crossroads Summit, which TradeStation Group is sponsoring. Crossroadssummit.com is the website if you want to check it out. We're going to be talking to some really interesting speakers who are going to be looking at, changing trends in the world of business and economics. I'll even be interviewing some of them if you want to check that out. So hopefully you can make it November 21st and 22nd in Miami go to crossroadsummit.com for more. Okay, now let's take a look at some of these charts, which is really what we want to see here. Okay, now we start with these weekly charts on TradingView, and I'm going to now just quickly go here, and I have my little list. I'm going to just pull up. I have my quick list here, my state of the market list that I want to start with. Okay. One thing I'll just briefly say is I think people have to be careful of placing too much confidence in bearish seasonality. If you look back, the last 4 years we've had, red Septembers, really going back, for a long time, we had bearishness into the presidential elections. But again, you have to be careful when everyone knows something is true. Financial markets have a way of not continuing to kind of honor that history or that sort of pattern. Everyone gets, the one side of things. I think the big question now is going to be kind of the question of rotation is really the big question in my mind in a rate cutting cycle, do we move into a period of, industrial, small caps, financials, gold and silver, all that sort of narrative becomes much more, I think, the debate. So starting in the Dow here, I'll just say, look at how we held that 40K level. It was that 50% retracement of that move. If you look from top to bottom, basically that we had back here in this move in August. In my view here, this is the one that has the most near-term sort of clear kind of positive indications in place. There's nothing much more to say about it aside from this. When you see how you have this resistance level from back here in May that went down and quickly kind of became support. So this has that kind of constructiveness on the weekly chart. Now go to the Qs, and on the Qs a little bit different because here at the Qs we basically have a situation where we have this level from back here right around it's interesting to see kind of at this 474. I mean, it was a low back here at this point in June. And, we can see we're just kind of sitting around it. If we came up, you can see it was the bottom of this tight range in late August before we dove lower. And we're just kind of sitting here. My perspective here, in some ways, if you look at the Qs, you got to look also on the daily chart, which we have here as a daily chart as well. And I'm going to go here to the Qs on the daily. And you can see that my, kind of view, just looking at this overall, the big mega issue now is this falling trend line that we have in place. And I think we got to just realize that, this is kind of stuck, below this level here from late August. And, there's all this narrative about, rotation away from tech and all these other things. So I think we have to realize is that with this resistance in place, this could be something that holds back the NASDAQ. And it could allow people to be saying, hey, financials are looking good and small caps are looking good. And the NASDAQ not looking so, near-term exciting. So as I kind of look at this here, I'm also wary of this high up here. This kind of double top below the old high. If you look at the Qs here, we had this level from, late July, and then it went back and became a high again in mid-August. This is to me something that is kind of potentially just a near-term, not a wonderful thing to be, seeing. And it's not necessarily overall bearish, but I think right now we have to realize is that this is something that people could look back on and say that this was actually a very negative thing to have this double top at this point here under the old high. And so I think we have to kind of just realize that this is a potential sort of issue. It might be a question here also. I think we have to realize is we have a new quarter starting on October 1st. So very often, beginning of a new quarter, we see rotation back to like the kind of mainstream bread and butter sort of stuff or the big names. And so it might be a question here of seeing, a few more weeks of simply lagging in the Qs before people return to it. But I think we have to be aware of this falling trend line. And from my perspective, people looking for a breakout, we're not that far away from the level. So people might want to be just kind of looking here really to see if we can break above 485. That might really be the level. It's that level here as well, right here, this 485 roughly, 486 area. And so I think there's a falling trend line you can see. So that's what I'm focused on this one. Now, S&P, held 5,400. We had talked about 5,400. We talked about it a second ago. And I think right now, when we look at this, from my perspective overall, I have noticed, I keep seeing articles. S&P Global put out an article last week talking about how negativity was the highest in over a year. If you look at National Association of Active Investment Managers, their index was more on the kind of bearish side. AAII, American Association of Individual Investors, relatively bearish as well. So the fact is right here is that we are near highs and we have a lot of negativity. I think right now we have to realize that this is a thing where everyone just knows that the stock market goes down before an election. Everyone knows that we go down in September. Everyone knows that we need to have a pullback. And when everyone knows something, like I said, there's a lot of money all on one side of things. And I'm saying knows, by the way, facetiously. So I want to just kind of point that out. This is something where there's a lot of, expectation on one side here. And at this point, we're squeezing near these highs. So, we are really close here to the all-time high. This was our record closing high back here. And so I think we have to kind of look out here with the Fed meeting and everything coming up. I just think we're near these levels. And, this is something where a breakout, if we close above these levels, this is going to be something where people are going to start to notice. And all of those people who were so sure that we were not going to break out until after the election and stuff, they might be in a difficult spot. So from my view here, with the Fed meeting coming up, it's extremely difficult to look purely at charts. But I think we also have to realize is that we are near a level here. And at the same time, the Fed meeting ultimately might not be that important. What I mean by that is we know the Fed's going to cut rates. When you're looking at the trillions of dollars sitting in money market funds right now, the trillions of dollars are going to be driven out of fixed income by rate cuts over time. It might be a spot here where there's not really that much ability for much of a pullback. And I think that's really the kind of key thing here. So as I look at this right now, I think the key thing was we held 5,400. The level I'm watching next is around 55.60. That was the low. See, that was the high back here. This was on that big crazy day on August 1st. If you go here to SPX on the daily, you can see we had this big outside candle. This level right around 55.60. It became the low on the weekly chart in late August, and then we broke under it and we got bearish for a few days. But now, from my perspective, people if we get to a bearish sort of thing here, people might be looking for a test down to 55.60, or potentially in a most negative scenario, maybe the 50-day moving average. But I also think we have to realize here is that, the bears have really been kind of, put in a difficult spot here. And 55.60, I think, is that level to watch to the downside. And then to the upside, we're not that far away from the all-time high. All right, so the Russell continues to be this sort of tricky thing. It also has this sort of falling trend line. But what's interesting to me about the Russell here is that, it's pretty much gotten above its 50-day moving average. And if you look at it, this thing really has not gone very far. And if you want something that people could see a potential, there's been this huge narrative about the Russell needs this rotation and all this sort of thing. And, at a certain point in time, narratives have a way of playing out. They're often early. But the thing is that I think there's a lot of people who've been burned in the Russell before. But then if it actually does start to come to life, it has that potential for people to say, this was finally it. I've been burned in it for the last, 18 months trying to buy it and getting slammed lower. But now suddenly, so I think right here, also we have to realize, this, closing high kind of back here, the high from back in late July. Again, people are going to be watching that, and we're very tight here, and we have this falling trend line. So I think right now, this is something that it might be in a spot that has that kind of most potential for a sort of shift into it. We had talked before about something like the RUT versus the NDX. We had talked about the fact that held that 50% retracement, and that's still in effect. This is basically the ratio between the two. And, that potential, if you look, This was basically the Russell lagging the NASDAQ for like basically the last 20 years. And what's interesting here is that, or maybe the last 15 years, is that there are signs here of this having reversed. So the question now is, it does have that space potentially to the upside if people are looking for things that kind of balance out historically. And even if you still believe that we're in a longer term, structural secular bull market for technology, a quarter or two of mean reversion to the upside in this is something people might have a sense of happening. So I think we have to realize that long term, the Russell against the NASDAQ still kind of has that potential for some rotation. Now I'm going to look at the 10-year Treasury yield, the TNX. We've been talking a lot about these accelerating decline in this and the potential for 3.25. And from my perspective here, that remains absolutely intact. We've had really no bounce at all in this. It's interesting today. We had basically this hawkish, so to speak, report from the Empire Index. And if you really take a look at it, I mean, the data here seems increasingly kind of a Goldilocks scenario of strong growth and moderating inflation. And so I think we have to realize that we're in an environment that is, I mean, from a macro perspective, potentially extremely positive. And we've talked about how sentiment has been improving, consumer sentiment last week, surprise to the upside. We've been talking about how sentiment is too bearish when you consider where unemployment is, where inflation is. We are comparable in consumer sentiment to where we were in the early 80s when unemployment and inflation were much higher. So people are extremely negative here, and there is that potential of people waking up and saying, you know what, the economy is actually not bad. We're going to have double-digit earnings growth potentially pretty soon. And here we have Treasury yields coming lower. So from my perspective here, you look at Treasury yields, people can still see some space to the downside. However, we do have to realize the economic data is not really very recessionary. So, some stabs back up to the upside, back to 3.75, 380 is something that could be in the cards here on the weekly chart. All right, XLB, materials, XLB. We talked about this last week and someone said, why do you think materials can do well if China is weak? Well, all I would say is take a look at XLB and see the companies that are in it. There's not really a lot of like raw materials like Freeport. It's mostly companies that are like chemical companies and packaging companies and stuff like that. I wanted to just kind of point that out because from my perspective here, this is at a long basing period here. And, this is one to me that we can watch and potentially wait and see, do we get a close above? Remember, one of the patterns that has kind of been interesting has been when something closes, when the weekly close is a record weekly close, or at least the longest in, say, 24 months or 18 months, like we saw with real estate or utilities. Basically, when you start to see those strong weekly closes at highs, then there has been a tendency for the acceleration to the upside. So here, when you look at materials, where we are in the economy, where we are with rate cuts, argues potentially in favor of materials, the XLB. I want to point that out because, from my view, there's a long basing pattern here. And often when things escape from these sort of patterns, that's where actually you get the extended moves. You talk about materials, people say, oh, I don't know anything. I don't like materials. I don't know anything about materials. Well, guess what? That's the reason why it can have an extended move, because nobody's paying attention to it and nobody owns it. And then that means that there's no sellers, and anyone who comes across it is a potential buyer. Right now, if you go to the average guy, he's got NVIDIA, he's got Apple, but he probably doesn't have Packaging Corp of America or Vulcan Materials or Linde or, these chemical stocks. So I think that's the key thing, is that when you think about it, it doesn't have that prominence, but this had that classic signal right here. When it closed at that weekly high was a 52-week high, and then it extended. So now let's see, can we close above this old high and extend? XLC Communications. This is one where I think we've been talking about how tight this is and its potential for some acceleration here. And I think right here, we've got this pretty clear level at 88. A close above this area here, could potentially be something kind of constructive. We're trying to break out against this high from back here in 2021. And so I want to kind of point this out. Last week, it's interesting. We made that weekly low. First of all, let me just say that, all right, we had this close on this week, and then we broke down, false breakdown, and held it. And now here we are pushing back on pace for this the second highest weekly close. I mean, depending, it's early in the week. But the thing is, we have that level around 88 to watch. I think that's important. And that's what I'm very much focused on this. 88 on the XLC could be where people are looking. Energy, we have been pretty negative on energy here. We've mentioned a lot of the issues impacting energy, and they remain very much in effect. From my view, there is this level of 87.60 XLE here. We're talking has that sort of potential to be retested to the upside. In an environment where maybe the market is strong or the economy is strong and the Fed is dovish or whatever it is, there could be a degree of stability and rest in this. And I would say if we look on the daily chart, let's take a look at the XLE on the daily chart, because, there could also be here, some potential lines. I would almost think the trend line might be something more like this. So the question now is, does it try to rally up somewhat toward this trend line? Does it try potentially to have some kind of, retracement of half of this move or something up toward that? I think we just have to be careful here of being overly negative on energy, given everything else that's kind of happening and the Empire Index number today and the potential for rates moving lower. However, energy, remains in this sort of overall downtrend. It's been down now 2 weeks. And this is something I just think if it flicks up closer to 88, that might be more of an opportunity for people. XLF financials. This is one where last week there was a lot of crazy news between JP Morgan and Wells Fargo. And here it is, coming right back. Seeing it come back and basically hold this weekly low is to me, very interesting. And it kind of suggests that the pieces remain intact. We're now setting up for a bullish inside week in XLF. And, this is overall, from my perspective, as long as it now can kind of hold this low, this is now looking like a false breakdown. You can see how it held this support. This is a relatively tight period now. When you think about it, financials have been strong, but they haven't gone anywhere now in like 4 weeks. And that might also be something when something's in an uptrend, that might be kind of what people are looking for. So as long as kind of the, this weekly level around 44.5 remains intact, people might have, it might be difficult for the sellers to have much of an edge in this. I'm going to remove this arrow. It used to mark my old bearish outside week. But like I said, the weeks on me, the outside weeks have not been working as signals of bearish engulfing weeks and stuff like that. They've been irrelevant. So I don't want to pay too much heed to them. XLI. Now, this is a classic one, industrials. We talked about on our webinar on Thursday. We basically talked about that 126 level. I mean, we've been talking about 120 to 126 on this one since forever. Basically, 120 to 126 was a range in the XLI. And here we are. We break out of the range. Old resistance becomes new support. This is, for me, a fascinating sort of thing to kind of see here. If you even look at this, I mean, you can see here some potential for these levels to be kind of giving way on XLI. And I think that Friday was the second highest daily close ever. And now we're, I think, on track. I mean, right here, we are now, pretty close here to breaking through that level. So when you look at the economic data, when you look also, don't forget that airlines are a part of the XLI. And we look at oil getting slammed and stuff like that. So from my view here on the weekly chart, XLI is something people might really be kind of starting to notice here. Again, it really hasn't gone that much, hasn't done that much for 3 to 4 weeks. This is this tight consolidation above the old highs. XLI here held that support, and it's pretty close to that, to that level. So this is one where, from a short-term kind of technical perspective, it seems to have something for people who are looking for maybe some upside. Okay. XLK. This is like a rubber stamp of basically the Qs, not a surprise. And basically you have this trend line. It's basically the same trend line. And in my view here, it's like it's trying to hold tight here. But the problem is you got some space to the downside. And it's like, where would it even go? 210, 211. That's a pretty significant, space to the downside here. It's some of the XLK. Apple has this new iPhone coming out, and there's like already people saying it's not going to do well. And I think so right here, it's not to say that that's true over the long run, but the market might want to pretend like it's true in the short run. So I think right now we're in a spot where there's space to the downside and, short-term resistance. And at this point in time, I think people have to be careful that if people are going to rotate into banks, into industrials, into financials, into small caps, what are they going to sell? Well, they're, the source of funds can be the mega cap growth. And this is the ongoing kind of conundrum we've seen. This resistance line is there. So that's what I think we have to kind of be aware of. The 50-day moving average as well. So, this could be just some space that we have to be kind of, paying our dues for a while. Maybe we have to wait for Blackwell to be good. Maybe we have to wait for Apple to actually report numbers. Maybe we're dead in the water until Apple reports. That might be the way it plays out. We have to be kind of looking out and realizing that, Apple's going to be reporting in about 5 weeks. Maybe we need to get to that point before people are willing to put the money into it. So XLP, the consumer staples, we had talked about how this had all kinds of overall, bullishness. We've been talking about how this had kind of escaped. It had that pattern right there when it closed at that high and just extended. From my perspective here, this is something where it's had this interesting run. And, now we should, maybe be thinking this is an outside week. And, I don't know, like I said, the weekly candles, what do they mean? But I think we also have to realize that this is pretty extended. We're talking about consumer staples here. These are like, not super dynamic stocks. So I think we have to just kind of, realize that we've had this interesting run here, and maybe people start to think about having 1 or 2 negative weeks, looking for some potential levels. As I actually get in closer to this one, I'm going to actually add a line here to this. And this is basically this, if you look here, this high and this basically the where it opened, where it closed and where it opened. Right across here, this kind of 83 level on this one might be the kind of the logical place to look. In my view here on something like this, it's actually more a question of just time. It might be a question of, do we have to have 1 or 2 negative weeks on XLP? I will add that I believe that there is some stuff that's not being enough appreciated by people who say XLP is a bearish thing because it's safe haven. I think something we're missing is the fact that the American population seems to be growing. And the other thing is that Walmart is a big part of XLP, and it has turned into this kind of like, pretty interesting growth story. So the idea that XLP is just a safe haven, I think, is not really true anymore. So I wanted to just kind of mention that. I think the population is growing, and that actually can mean that you can have more demand for, basic consumer staples. And it can be a growth area, even if it's not a safe haven area. XLRE real estate, we've mentioned this. I mean, it just keeps making higher lows on the weekly chart. I mean, it's like this ever since back here, or basically, at the end of June, it's made a higher weekly low every single week. XLRE, it's getting near this level though from here. From my perspective, though, we're also in a spot where this might actually have a cyclical kicker, because it gets to that spot where, if we have the Fed cutting rates and the economy doing better, there might be more demand for office space as well. Things like retail and consumer discretionary, which we're going to get to, all those things potentially benefit from this. So from my perspective here, again, it's been up a lot, a real long winning streak. We should be cognizant of this level, but also realize that real estate investment trusts are relatively underowned, and they benefit potentially from what the Fed's doing. So it's interesting to look at utilities here, XLU. And it's interesting because the government last week, the Energy Information Agency, raised its estimates for energy consumption for electricity. It's kind of interesting. We had talked about this kind of 78 level, saying, hey, that might be a level people are aware of. And we just kind of pushed right through it. But again, kind of like consumer staples, I think we just have to kind of, take a step back and say these are utilities. And again, these have more of a growth than a safe haven. I think you have to realize here is that some of these safe haven areas, and I don't have time to get into it, but healthcare, we talk about healthcare is in a secular growth phase. It's not just a safe haven. And it seems like utilities and consumer staples, these guys are fundamentally in secular growth now. And we will cover that more in market trends on Thursday. But the key thing is, they're not just necessarily what the textbook says they are. Nonetheless, these have kind of broken out, and chopping and testing these old highs might be something people look for in XLU. XLV, similar sort of thing here. It had this sort of bearish outside week. From my perspective, we do have to also realize that this is something where, it's more that it's had that big, candle, and it's just kind of, it might be at risk of some sideways consolidation here. And that's kind of what I'm looking for. This is not as clear of an uptrend as some of the other ones that has kind of broken out to the upside. But at the same time, it basically had this big reversal, 2 weeks ago. So, I'm like watching this here to see if we get back down to the weekly low around just under 154 is basically what I'm looking for in this. XLY is not, last but not least. Last week we were talking about consumer discretionary ETF had some very interesting price action. We said 188 was the level. It crossed 188. It pushed over 190, and that was really the level that we really have been focused on. This kind of this short term. We had it on the daily, but anyway, I think it's important to realize here is that things happening in consumer discretionary, whether it's Tesla or whether it's the fact that we have retail sales tomorrow, or whether it's the fact that home builders are strong, all these things together here kind of, I think, keep an interesting focus on the XLY. This is also back. It has space to the upside versus where it was in 2021. So, from my perspective, this is one I'm kind of watching. Had last week the highest weekly close in a while. So this one actually, that was the highest weekly close really since back here in like January of 2022. So this signal actually was in place for this, and this is actually that kind of signal that would suggest that this is one that might actually be having that more of a positive sort of constructive pattern on the weekly chart. So basically, look at how it got above. I'm sorry. It's interesting how if you look at this where it is versus the end of July, early August, and then look at XLK. XLK is below those levels from late July, and look at XLY is above. So to me, again, this is something that's kind of confirming it had this pretty aggressive rally, tight consolidation. It held that weekly low with a false breakout, and then now it's holding above a false breakdown. So those are the main things I want to cover here. We will be back on Thursday afternoon. Great to talk to you guys. Go ahead and check out if you want to look at my blog at the article we did. We talked a lot about how it held the S&P kind of held 5,400. But again, don't forget we have retail sales in the morning, and then we have Fed on Thursday. A lot of these things might be nothing more than just an opportunity for volatility, and then after that, kind of just continuation of the trends that we kind of see in place. It's a good kind of idea potentially to have levels in place to be kind of thinking, okay, if it's a hawkish sort of thing, where do I want to be a buyer? If it's a bullish, if it's a dovish sort of thing, where can it extend to? Just something like that to be prepared going into the Fed meeting, to be drawing your levels and to be kind of prepared and to be open for a lot of different scenarios. This is one of the weirdest sort of things to be trying to figure out. I think it's a good idea to be kind of planning and preparing and drawing levels beforehand. So I will see you guys on Thursday afternoon, 2 p.m. And don't forget about Crossroads Summit. Have a good one. Thank you.